Hey, good morning. It's Garrick with eXp Realty, and today we're talking profit, loss, and cash flow. These are important concepts in any kind of a business because we want to know where our money is and where our money is going. So it's going to go through real quick some of the vocabulary. Budget. You should have a budget. You should know where your money is You should know where your money is coming from and where your money is going. Revenue is money coming in. Expense is money going out. And at the end of the day, you want to make sure there's more money coming in than going out. Okay. So whatever that money is moving in or out, that's called cash flow. So a lot of things today is based off of cash flow. Okay. So your personal life has a cash flow. Okay, I made $100, but I'm going to spend 50. So you have $50 positive cash flow. You have an unexpected expense. You blew out a tire. Now I have negative $250 cash flow. Okay. So the cash flow is not necessarily expense, but one item by one item, but it's more like a monthly calculation, right? So every month I'm getting this much coming in, every month I have this much going out. And you want to make sure it stays positive. And if you're going negative, that you know that there's an end to this negative because you can't operate negative forever. Okay. Burn rate. This is a term that I learned when I was in tech because a lot of startup companies receive a big lump of money. We like your idea. Here's $50 million. Please don't lose it. Okay. So with $50 million, they have to pay for rent. They have to pay for salaries. They have to pay for um, the building. They have to pay for research and development, computers. That's called burn rate. Okay, so burn rate is how fast you're using up the money that you have. So let's say you have $50 million and you're using up $1 million per month. So that means you will last 50 months. Okay, so that's not bad, but that way you can see how the expenses are happening. You can time how fast you'll go broke. Okay, ideally, you don't go broke. You can't drive a car with no gas. There is no negative gas in a car. Just like in business, you can't, you can have credit, but in the case of a startup, when you don't have credit, you just have cash, you can't operate negatively. What if you can't make your rent? What if you can't make your interest payment? What if you can't pay salaries? People leave. There's no negative in that case. Okay, so burn rate. So we're all in a startup business in a sense because we're all independent entrepreneurs and we need to make sure that our own cash flow is positive and that it makes sense. Okay, we have a lot of this is a high dollar value business. That means the income is very big, but you also have very big expenses. And if you can control them, then that way you can be wealthy. Okay. Profit is anytime you have positive money after your expenses. Okay. So profit is not the same as revenue. Revenue is just all the money coming in. Okay. So revenue might be $1 million, but if your expenses is 1.2, you have no profit. Okay. You've lost $200,000. Okay. So deficit is losing money, negative money after expenses. Net worth, your assets minus your liabilities. And what are your assets? Assets are items that are owned by the business or owned by you. Liabilities are obligations that you need to pay. Okay. Like mortgage, things like that. Okay. Appreciation and depreciation. Appreciation is not I like you. It's the value of the asset, the growth of the asset. Okay, so for example, if you own a house, it's $1 million and then it has a 10% appreciation. So next year it'll be worth 1.1. Depreciation is the opposite. So if you have $1 million house and it depreciates by 10%, so your $1 million house becomes 900,000. Okay. If you're while we're working in real estate, we work with people who are either financially educated or are becoming financially educated. So you need to be able to speak the same language or better than them. Otherwise, they don't trust you. You're not just a salesperson. Hi, here's a house. You want to buy it? That devalues yourself. And that also gives you no, what's the benefit of using you? You're not giving me any advice. What is so good about buying real estate? Okay. Here's the spreadsheet. So let's go ahead and do that. Oh, I already opened it up. Oh, let me send you guys a link. Try that. Okay. And then this here is the spreadsheet. So I'm going to send that too. Okay, let's go. So let's talk about budget. Okay. This is a budget. You need to do a personal budget. Okay. Because ultimately this is for your life. Okay. You yourself need to know where your money is going. Okay. So at the basic level, this is a budget. Okay. And I actually ran this for a whole year. So I actually put these numbers down. I put I put January, February, March, April, May, June, July, all the way to December. And I projected what my costs will be for those months. And then because I wanted to see if I was earning more profit over time or loss over time, because some expenses happen like twice a year, or some expenses happen, once a year, or it's an unexpected expense here and there. But this here is a monthly budget. This is a 1 month view. This is an average. This isn't necessarily mine. This is just an example. Okay. So you're going to budget. You need to find out all the incomes that you have. Okay. So maybe you have an income, and maybe your partner has an income. Maybe you have a rental property that's earning you money, and it says 300 here because that is a net income, okay, from that rental. So the rental would have its own calculation. It's not like I don't put that all in here too. You could, but it then becomes really messy. So you have another spreadsheet just for the rental itself. Okay, so you got your income, you got 5,000. He earns 5,000, she earns 5,000, and they have a rental income of 300 and a side hustle of 5,000. Maybe that's like driving Uber or whatever. Okay. There's a budget and an actual, because budget is what you planned on and actual is what actually happened. Okay. So in this case, I'm showing side hustle did not earn 5,000. In fact, it only earned 3,500. So it was a slow month, and I may need to adjust that. That means maybe here going out, maybe the income from that side hustle has decreased. So that's something that needs to be considered. Okay. Rent, find out what your rent is, find out how much groceries you spend. Okay. With inflation. Oh, I thought I was going to spend 600, but in fact it was 800. Okay. Student loans. Do you have a student loan? Do you have a car payment? Do you have more than one car payment? Credit cards. So because the groceries are separate, and power, cable, and water utilities are separate, you could put this as just whatever is balance left on your credit card, or you could just net it out, right? So for example, hey, my credit card was 2,500, but groceries was 800, so I'm going to separate those out separately so you don't double count groceries. Okay. Oh, which one's requesting access? Okay, done. Okay, so over to here, we have electricity, cable and internet, car insurance, annual expense, like things that you have to pay annually. I don't know what that could be. Oh, there's other stuff too. Didn't think about that. Okay, how about health insurance? you know, because we're independent contractors. We don't have work paying for that. So you have to pay for that on our own. Annual expenses, let's see, maybe you have life insurance. I have no idea. I'm going to put that in here anyways. Okay. Good. So then now you take your total income and your total expenses. So if you don't know how to use spreadsheets, okay, so this field here is equal to, and then you highlight all the numbers that it includes. Okay, so that's a summation, and then it, oh, hello, it doesn't like these things here. There. Okay, so your total income should be higher than your total expense. If your income is not higher than your expense, you need to figure out your budget. Okay, because you cannot live negatively. If you are in the negative, you're borrowing money, you're using credit cards, you're going to be in trouble. Okay. This is basic finance. Don't spend more than you earn. Okay. I hope that's obvious. Business. So now, because we're independent business, we don't have a salary. So we do need to calculate what our business income looks like. Okay. What's your commission? Do you earn revenue share? Are you mentoring? And then these are some of the business expenses that we can expect in our business too. These categories here are actually pretty standard categories on an income statement or on an income and expense statement. Okay, these are also the ones that you see on the tax form. Okay, but I put over here on the side notes to kind of like categorize where you would put stuff. So, for example, you say, "But Garrick, I don't have accounting and legal fees." Okay, well, do you pay for software to do your taxes? Do you have a CPA? Do you use a budget app? But Garrick, I don't use advertising. Okay, do you print flyers? Do you sign up for Zillow? Do you pay for staging? Do you take your friends out to dinner just to, you know, to encourage business? Or do you take them to an entertainment event? Okay, but I don't have any dues. I don't subscribe to magazines. But you pay for MLS dues, you pay for CAR, NAR, and you pay for EXP monthly. Okay, those all fit into here. Other things that have costs. Okay, maintenance, repairs. Okay, maybe this is a monthly fee. So let's say I put $50 here. So 50 would be $600 a year. So maybe you need to buy a new computer, or you need to fix a computer once per year, and that's going to cost you $500. That's basically $50 a month. And maybe you pay for Apple Care, so that would be like maintenance and repairs. Payroll expense, but I'm just by myself. Okay, then you have zero. But some of you have a virtual assistant. So what is the cost of your virtual assistant? So maybe you pay that person. I pay the virtual assistant on PayPal and by credit card. So that will show up here. Okay. This is all for planning too. And then also planning in the actual. Okay. Research and development. That's a totally tech term, right? Like, and medical term, like you're trying to figure out the new cure. But even in real estate, so what do we do? What is included in R&D? That's the real meaning for R&D, by the way, not rip off and duplicate. So we have education. Do we go to conferences? Do we buy books? Do we subscribe to magazines? Magazines actually go here. Where did they go? I'll put it up here. Not like it's expensive. It's like $5 a year or something. Okay, salaries and wages. Do you pay yourself? Okay, set aside a salary. And the Tom Ferry video that teaches you about how to handle your commission, you should set aside about 30% of the income of the check as, you know, salary for yourself. So that means 30% goes to Uncle Sam and the other 30% goes to back in the business. So you can see hypothetically, in this $10,000 commission right here, okay, 2,870 is already being spent on expenses. Okay, and then 3,000 is being paid for yourself. So that's roughly 1/3 back to the business, 1/3 to yourself, and then any left over will, we're going to pay Uncle Sam. Okay, that's taxes. Not sorry, Sam, not you. Those are taxes.
Gary, for the 30%, is that approximately tax for your income, or
Everybody's going to be different. So for example, if you have high income, you might be higher tax. If you have low income, you might have lower tax. So these are just a rough estimate.
but you put
Everybody's going to be different.
your tax on your expense too, right?
Tax on your what?
On your expense, I mean, on this worksheet.
I don't have taxes separated out here.
Okay.
Okay. But those will be your expenses. Yes, you need to budget for your taxes. Okay. So, but all these also are good because these become deductible, right? Because if I spent this money, like education, if I spent this money for the business, then that becomes a deductible. So that actually takes off of your income. So your income is less. Okay. So if you spent 30% on the business and you spent 30% on yourself, then your income becomes only that 30% that's left, and you pay taxes on that. Okay. Income should be higher than your expenses. If it is not, you're in big trouble. This is cash flow for your business. Okay. And then now on to rental properties. Okay. So this conversation started because Jasmine wanted to know how to handle like an Airbnb. Okay. So you have a choice. You can go buy a house and make it an Airbnb. You can also rent somebody else's house and turn it into an Airbnb. Okay. If you decide to rent the house from somebody else, you need permission from that person to sublease it to somebody else. And you should make clear that they know what you're doing. Otherwise, they're going to come after you and say, well, what did you do this for? Okay. So you can, if you find a property that is suitable for Airbnb and the owner doesn't want to have the headache of Airbnb and you want to do it by yourself, you can say, great, I'm going to go rent this property for, however much. So in this case, let's take a look. Okay, this is the income. Okay, so let's say I'm getting an income. This is not an Airbnb calculation. This is a long-term rental. Okay, so I'm going to get an income of, this is any rent. This is a hypothetical rental. Okay, rent is $2,800 for a single family house. Got to pay advertisement. So maybe I put it on Zillow or Hot Pads and to find the renter. So once the renter is in, you don't have to keep paying for it. But the idea here is that it's budgeted annually. So that way, in case you have a tenant that stays there for 1 year and decides to move out after 1 year. Okay. Airbnb has a 3% surcharge. So if you decide to rent out on Airbnb, just plan ahead for that surcharge. Okay. Depreciation is a paper loss. So it's not actually a loss here. It's actually a loss on your paper when you file your taxes. So this is beneficial. So it means you end up paying less tax for your income, for your cash flow income on your rental property. Okay. But check with your CPA. I'm not a financial advisor. Do not take this. This is for entertainment purposes. This is not legal advice. Okay, that's my disclaimer. I should have said that at the very, very beginning. Okay, accounting. So you might have a property manager. Property management usually, wait, hold on. I put it down here. Why did I put it down here? Okay, so that's not property management. No, it is. Okay, I'm going to put it up here. Property management. Because I put a separate line. And I don't need to. I do have a rental. I do self-manage. So I go and collect the check myself. Actually, the check is not collected by me. The check is direct deposited into an account. So I don't need to do anything. Okay. So that is a so if you don't, and you decide to have a property manager may charge you 6 to 8%. And what they do with that is they collect the money, they do evictions, they do tenant screening, they receive the phone calls for when the toilet gets clogged at 3 in the morning. So that way it's a layer of separation between you and the tenant. And sometimes the property is not close to you. Let's say you live in California and the property is in Tennessee. You're not going to go to Tennessee to go fix that toilet. You're going to hire a property manager. You should always budget for a property manager. Don't be cheap and say, oh, I don't want to do property management. I don't want to pay for it. But you should pay for it, or at least budget for it. Okay. Because it's easy to manage 1, 2, 3, 5, 10. What if it gets to 20, 30, 50, 100? Okay. You should have that budget set aside. Advertising. Okay. We talked about that. Depreciation will be on your tax forms. But you can plan for that because it is considered a profit center. Okay, it's take away from your income, so you have lower taxes to pay. Dues and subscriptions, I don't have anything. HOA dues, maybe the property you have for rent is in a community that has HOA dues. You need to pay insurance on your property because what if it burns down? All properties have to have insurance if you have a loan. If you don't have a loan, you should still get insurance to make sure your own asset is protected. Okay. Interest expense, I don't have anything. Maintenance and repairs, you should budget 10% monthly for your maintenance and repairs. What if the roof falls down? What if the window breaks? What if the toilet's clogged? What if you see the video that I posted on Slack where the tenant, clogged all the toilets, ran the water, and trashed the place? And during the Invest Now Summit, one of the tenants was so upset, they clogged the drains. They let the water run. The water flooded the apartment and the other 3 apartments in the building. Okay, so they were out of income from that building for many months. Okay, $280 does not cover that, but that's just something you have to budget for. Okay, mortgage. You bought the house, now you're renting it out. So you have to make the monthly payment on the mortgage of $2,500, and you're renting it out for $2,800. So it sounds like $300 profit, but it's not. You have all these other expenses. Okay, so it's not just that easy. Payroll, maybe you pay a gardener. Taxes, there's property tax and business tax. You got to get a license for that. Okay, so my expense is 3,310, but my income is 2,800. So I'm already negative. This is not good. And this is actually pretty common in the Bay Area. Okay, so I have an income of 2,800, I have an outflow of 3,300. I have a negative cash flow of $510. In the Bay Area, this made sense only because you're losing $510 per month, but you're earning $20,000, $30,000 per year on appreciation. Okay, the appreciation calculator is not on here, but I could probably add that later. So do you see that? Do you see the benefit there? You're earning on the long-term appreciation, even though you're losing on the monthly cash flow. In other states, you can't do that because in other states, there is no appreciation. So you can't lose $100 per month to go gain $20,000 per year. You're losing $100 a month means you're losing $100 a month. You're not getting that back. The house is not gaining 100,000 at the end of the year or 50,000 at the end of the year. So in other states, in other areas, those are I call them cash flow cities or cash flow states. You must have cash flow. If you do not cash flow, you are dead. In California is an appreciation, kind of like boom and bust. So if it booms, you can handle years of cash flow loss for long-term appreciation gain. Okay. Does that make sense? Any questions on that? Okay, we can have questions out afterwards too. And then the final topic is the net worth calculator. Okay. Net worth. What is your net worth? Okay. Maybe you have real estate, you have a property, property one, property two. This is the value. You can ballpark it using Zillow, Redfin, or just do your own comps. Maybe you have equities, you have stocks in Robinhood, in E-Trade. Do you have a 401k? Do you have a checking? Do you have savings? Like cash, right? Do you have cash in those two places? Do you have a crypto? Do you have cash in your mattress? That's not a joke. You should have cash somewhere in case you can't get to the bank or other. Okay, so these are your assets. If you have a collectible car, that is an asset. If you have art, that's an asset. But it's hard to determine the value of those things. Okay, and some assets depreciate over time. Okay, so for example, a car, like if you drive just an SUV, I paid 80,000 for an SUV. Doesn't mean it's still worth 80,000. Next year it'll be worth 70, and the year after it'll be worth 60. And if I drive a lot, it'll be worth 30. Okay. So some assets depreciate in value and some appreciate in value. So real estate tends to appreciate. It does not always appreciate. There are years that it depreciates. There are years that the price goes down. Okay. Liabilities. These are things that you got to pay for. Okay. You have a mortgage for that real estate. So for example, this is nice. I have a $1.3 million house, but a $500,000 loan. So this means there's 13 minus 5 is what? 800,000 equity. That's what it means. So take away house minus mortgage is 800,000. So that's your equity. Oh, I need to put that as a vocabulary word. Credit card. Do you have a credit card balance? Okay. Balance is the part that you haven't paid or won't be paying, right? So let's say you have a $10,000 balance left on the card, or 20,000. Those are negative. Those are liabilities. Do you have a student loan you got to pay? Do you have a car loan you got to pay? Okay. So you take in all of your things that are worth something minus the stuff that's against you, the liabilities, and you subtract those two, and that gives you your net worth. Don't get too caught up on this number because this can fluctuate up and down depending on the market. Okay. So a lot of times when you see like Steve Jobs, no, I mean, sorry, Bill Gates, Elon Musk, say, hey, they're like number one, number two, number three in terms of net worth. There's a lot of people that aren't reporting net worth. So you don't see those numbers, but that's what that chart is about. That's what the net worth is. Okay. I hope this was educational, and I hope you maintain a positive cash flow. Okay, this one is your what? Personal. And this is important because we're seeing a lot of news of a recession coming, and we need to be able to pare down our expenses and make sure that we're able to weather the recession positively. Okay. Now is the time to prepare. If you have expenses that don't need to be spent, cut them. Okay. If you can be more efficient somewhere to do something, do it. Okay. If you have a way to hoard cash, do it. Okay. The opportunity to spend it will come. Don't be in a rush to spend the money. Okay. This is the video about managing your income, your commission income by Tom Ferry. So you should go ahead and watch that video too. So to set up for success, okay, get your financial statements together, write them all down. You got to do this anyway for your taxes. Okay. So just at the same time while you're preparing for your taxes, do these calculations on your own. You can go ahead and copy the pages and fill it out on your own just to check, just to make sure, and visit it Set a goal for yourself. Oh, I plan to save $300 a month. I plan to save $1,000 a month. Okay. Review it monthly. Check. How are you? Is it matching with what your prediction was? And then you adjust as needed. Okay. This is not going to be done in a month. It might take a few months, and that's okay, but you got to do it. There are apps for this, by the way, and I don't have the apps ready for this conversation. I'll go ahead and add it to here after I research it. Unless you guys know, do you guys know any personal finance apps?
There's one that I use called Every
What's that
Dollar.
called?
Every Dollar.
Every Dollar?
Yeah.
Anybody else?
I use
QuickBooks?
I use QuickBooks.
Yeah, that works too. And that should give you reports like monthly, or you can do live time. You can scan your receipts and categorize them there at the same time. There's going to be, I'll put other ones here after the call, and then I'll go ahead and as I figure them out. Anybody else know anything else? Mint, yep, I heard of that one too. All right. If this okay, all right, thank you. I'm gonna see you on the next call. Hold on, I'm just shutting down the recording. How do I do that?